Good morning, folks. It's Harry Swaminathan. Yesterday, Chipotle announced its results. It was mixed. It met its, I believe, its revenue guidance, and then it maybe fell short by 1 cent on the earnings, or just met the earnings. So it wasn't very good or very bad, which was good for our trade. So if we look at the Chipotle IM Condor, let's go take a look at it. The Chipotle IM Condor right now in after hours, it's about 6 in the morning. It's trading around 303. So it's well within our range. I think today and tomorrow we should see some further time decay. I believe we can keep this till expiry, or if we can, there's going to be quite a bit of volatility coming out of it. So if we can get the good volatility crash, then perhaps we can take this trade off. Similarly, the Netflix trade is also doing very well. You can see we have a theta of 999. This is, of course, there's only 2 more days left for expiry. We are already up about $1,400 on this trade, and we expect to get our full profit, $4,200 on this trade. So this was a trade we put in last week. Chipotle, of course, was a trade we put this week. So these two trades are doing well, and Netflix, I think we can let it expire this Friday. Unless it makes some crazy move, we shouldn't have to do anything with it. The next trade I'm looking at is Apple. And the reason is, and this is going to be a different, slightly different kind of trade. Let's go look at Apple charts. And here, about a few days ago, just after earnings, it crossed the Bollinger Band, but that doesn't mean you can get into a trade. You have to wait for the down cycles to get to work itself out. So you can see the very high volume. When it released earnings, it dropped by $50, and then it sort of stabilized. This was a good point to get in because during this bar, you can see there were high volume came in, and the bar ended in the middle. So, this was a good support point for Apple. So ideally, we should have gotten yesterday, which would have been great because Apple had a great run. But that doesn't matter. We're looking at this Apple trade for the long term. So the trade I want to do is, it's going to be a longer term trade. The trade rationale is that Apple is being oversold. Right now, its PE ratio is 7. And that is just ridiculous because companies like Amazon and Amazon has a PE ratio of 4,000, which is again ridiculous on the other side. But Apple, for some reason, has gotten out of favor. It's probably a good reason because there was a whole lot of hedge funds and big money just playing the stock in a very big way. But there is no reason, even if you look at the fundamentals of the company, it's completely been oversold. So what we're going to look at for Apple is a long-term trade. So if we want to make this trade really work for us, so I would say either we look at the April series and May, and even the May series. Let's go take a look at the options in the May series and see what we have here. So let me turn this down. So Apple's currently trading at 457. So let's say we were to buy, so the May series has 100 days left. So that's pretty good. And what we're going to do is look at the 500 call. So the 500 call is going for about $10, $10 and $10.30. So my goal with this Apple trade is, over the next 100 days, we need to make I would say 100% return. So if we invest 10 contracts into this position, so let's say if we do that, then so put it 2 times. So let's say we pay $10.30 for this call. We're going to buy 10 contracts today, but my total position on this trade would probably be 20 contracts. So we're going to go only halfway. So this is one trade where we are going to decide that we are going to go with a bullish trade on Apple, with the understanding that Apple might, in the very short run, it might fall. Like yesterday, it went up $15. So today it might come back down. So we don't want to execute this trade at the open. We want to see where Apple trades, and if the bullish momentum continues, then we definitely want to get into the trade. So we pay somewhere around $10, something between 10 and $11. But let's say Apple fell down over the next few days, fell by $10, $20, then we would want to double into it, or we would want to add 5 more contracts, or 10 more contracts. But if it's falling, I would say we would add 5 and then keep the other 5 as a next round of doubling down. So this is one trade where we would do that. Now, once we get into this bullish trade, we are going to have ways to cut down our cost level. So that will be the adjustments over the next 1 to 2 months. So if we have 100 days for this trade to work out, so which is about 3 months, but what we can do is, in the meanwhile, we are going to be able to look at ways to reduce the cost basis of our trade. So that's the trade rationale. So if you put this, obviously you're going to, if I put 10 contracts, the margin required would be 10,000. It's a long call, so there's no, so the margin is exactly what you need for the trade. So that's what we're looking at for today. I will send out an email later and see if we're going to execute it, what would be a good execution point. But it's a long-term trade, so exactly where you get in may not be that critical. But if Apple bullish momentum is going to continue, I say we get in. On the other hand, if it comes down, which is even better, we'll get a better price. So we may want to jump in at that point also. Anyway, so we'll keep this trade in mind, and otherwise the Chipotle and the Netflix are looking very good. I think we should be able to get a full maximum profit out of those. Thank you.